Of course, we know that not only was the challenge of COVID met with in a meaningful way, but that was used by the Prime Minister to unravel a series of important reform measures which were taken at that time. Yesterday, too, was speaking to the nation and articulating some of the issues which need to be concerned, looking at the contextual situation in which we are. He had mentioned 5 or 6 points, which I'd be very happy to articulate during an interactive session. But let me make a few points on the issue of banking, which is the important segment. Well, look at it from one point of view. Banks are in a very healthy situation. LPAs, private banks, are only 2.5% of overall banks. Foreign banks are lower. Private banks are 1.73, but an NPA of just 2.5% when we have been used to a very, very high percentage of non-performing assets. Now, what is all 2017, what will be dogging us? The twin balance sheet challenge has been addressed. And I think from that point of view, the focus must now shift on something that Shifty very rightly pointed out, the chairman SBI, that what are the critical bankrupt strategies which lie there. I recall since introducing me, Zvekatawan, you very kindly said that I have seen the evolution of the sector for a very, very long time. I've had the privilege and the opportunity of seeing this banking sector reforms right from the time when I was grappling with India's balance crisis in 1991. We forget all that. Between 91 and 93, we had the Narasimhan Committee 1. It undertook a very major reforms on some of the banking sector. Thereafter, we had the Narasimhan Committee 2. And we also recall that we had the Justice Ramakrishna Commission to deal with some of the legal infirmities in the entire banking laws. So, in some ways, the foundations of banking reforms as we go forward are really well laid. During that period, by the three successive committees, Narasimhan Committee 1, Narasimhan Committee 2, and the Ramakrishna Committee. So as we move ahead, how we are at an inflection point. How could banks, in a meaningful way, help India in its pursuit for a $5 trillion economy? We certainly need to address some of the fundamental issues. First and foremost, fundamental issue, and I'm sure, Shetty, you would have wanted to point out this, is I read a very interesting piece yesterday by the chairman of the Prime Minister's Economic Advisory Council, Mahendra Dev. He sent it to me. Is it talk time that we should look at three important parameters? Parameter number one, the foreclosure of priority sector lending. Now, priority sector lending today constitutes nearly 40%. It circumscribes greatly the flexibility of India's commercial banks. Mahendra Dev has made a very great plea which I support in spirit of revisiting the roles and the ceiling for priority sector lending. Two other parameters. One is over a period of time, with two other big foreclosures are the CRR, the cash reserve ratio, and the statutory liquidity ratio. Both these, when taken together, add up to another 21. It used to be, of course, much higher. The SLR has been somewhat calibrated down. The CRR has also been brought down. But when you add with the 40% priority sector lending, a very large part of the commercial banking's operations then foreclosed, offering really people like Shakti of the state bank really to go forward a big, big issue and a challenge of finding adequate liquidity to meet India's growing liquidity needs. So we need to visit all this. We need to also bring down and more efficiently the problems of the fact that the banks are still the principal or entity for meeting the liability for India's rapid infrastructure growth and infrastructure expansion. This is so because we must admit that deep bond markets have not developed. Deepening India's bond market has been a growing quest. If we do that, it will relieve somewhat the pressure on India's commercial banks in a very, very significant way. Of course, we realize that there is a mismatch in household savings in India and the requirements of the corporate sector. How does one handle the saving dynamics of an evolving culture when the banks are really being bypassed because options are being exercised in other multiple forms of financial intermediation, which households find much more lucrative than nearly the banking sector. Finally, you need to cover how technology and demographics really are going to be absorbed by the banks in enhancing productivity and yet at the same time continuing to give the investor comfort. So the five strategic considerations which I believe first is a consideration of the tech-driven AI digital stack. How do we meet that in a meaningful way? The second is how do we recalibrate the norms of priority sector lending, the norms for the statutory liquidity ratio, and of course the cash reserve ratio, freeing up more resources for more gainful utilization. In addition, the third is, as I said, deepening the bond market. Fourth is a great boost how you can do boost household savings and move it in a direction when they can be more meaningfully utilized. And finally, last but not the least, how do you improve scale and how do you improve comparative efficiency of the banking sector? If you compare global loans, well, the cost of financial intermediation has significantly come down in India. Nonetheless, if I was a global investor, I'd want to look at the cost and quality of financial intermediation of alternative investment destinations and then compare it to the cost and efficiency of the financial intermediation in India. This is a continuing challenge. But this brings me to a different issue altogether. We have talked about this for very long, Mr. Venkataraman. We have talked about it, how to amend the Banking Regulation Act of 1949. By the way, one of the very interesting features of the Banking Regulation Act of 1949 is that an investor can hold 74% in a bank, but his voting right is capped at 26%. I ask you, which investor would like to invest if his voting right is not commensurate with really his investments made and does not translate into his say in the management position of the bank? I must confess that there are two avenues which we need to tap into. Avenues of, for instance, I was moderating a session on orderly climate financing for climate transition. This is session which I'm doing tomorrow. But one of the interesting features which came up is large pension funds are available who are looking really for opportunity of investment and credible investment in India's economic growth prospects. I came across the gentleman from Norway who is handling the sovereign fund of Norway. It's a very large sovereign fund. I had an interaction with the large pension fee holders who want to invest pension funds into India's growth economics. So I end by saying two more things. The Reserve Bank of India in 2020, when the current Principal Secretary 2 of the Prime Minister was the Governor of the Reserve Bank, he had constituted an internal working group which would enable large corporates to promote banks by amending the Act of 1949. some of those recommendations have yet to gather the kind of political consensus which, and I'm sure that in his current responsibilities, he will not forget what he has done in his capacity as the governor of the Reserve Bank of India for 6 years. So, looking at this issue holistically, on some of these critical issues, five, six issues, would dramatically improve the contribution, cost, and the efficiency of the banking sector playing an increasingly more important role in India's growth story. The growth story has been a great growth story. I remember from the struggling days of 91 for India to become now the largest and the fastest growing economy in the world, moving at incredible speed on becoming the third largest economy in the world, looking aspirationally not only to becoming a developed economy by 2047, but what is the theme of the CII or India in at 100, the annual session, the future of India, 100 years for India's independence, not merely 1947, which is the date when we have decided to take credible steps now in a meaningful way. Under the Prime Minister leadership, there are few times in history when you get such continuous stable political leadership, which is embedded in the growth story of India, and the panache with which important structural changes have taken place in far reaching India's economic reform augurs well that they are cognizant of some of these issues which I have flagged, and as considered appropriate, difficult to build consensus on many of these, but there will be no lack of effort on the part of this government committed with the goal of making India a developed economy to continue the credible efforts. It is in this context, therefore, I have greatly valued this opportunity provided by the CII to speak to you on banking and banking related reforms. Thank you very much.
Thank you, Singh, for that masterly setting of the macro frame. You've given us both a benchmark and a challenge. And I do now call upon Sanjeev. Mr. Sanjeev Agarwal is the MD